Welcome back to Market Day Report. I'm Scott Shelly, otherwise known as the Cow Guy. And I think maybe it's the black and white jacket that gives it away. I don't know. Could be Chick-fil-A, maybe Gateway Computers. Remember them? I get stopped for that every now and again. But anyway, why don't we take a look at these markets, because that's more important. These markets are your money. How about that corn table? That's not bad, is it? Look at that. 9 cents higher on a quiet Friday for corn, just marching right ahead. And it's been 3 cents higher from here, right? So we're to 9.25 cents higher in March. 634.5 is last May. Up 8.5 cents at 631.5. How about soybeans? Let's take a look at what they're doing. Double-digit gains again. Look at this strong. We were look at the high in March today, 14.79. Well, we're up 21 cents in March. 14.69.5 is last, and that's 10 cents off the highs, and that's some good going. May up 21 cents at 14.75 even. So those two are good for a Friday, right? That'll give you that good feeling. How about wheat? March wheat in Chicago up 9.25 themselves there. 7.86 is last. They've been up 7 cents from there. So we had double-digit gains in Chicago wheat. May is up 8.75 cents at 7.91 even. Moving over to the hardwood wheat in Kansas City. That's up 10.25 cents. Boy, oh boy, double-digit gain there. March is 8.03 last. May up 9.5 cents at 8.06.5. Okay, how about spring wheat? Let's talk about that for a second. Spring wheat in Minneapolis. Look at these gains. 16.25 cents in March, spring wheat, Minneapolis. 9.18 last, 5 cents off the highs. May, 15.75 cents higher at 9.15. Let's take a quick look at cotton. As they say, this one's going up like a homesick angel, right? 267 points higher at 124.30. Look at that. Okay, let's bring in our next guest analyst, Todd Horowitz. He's with Bubba Trading. Todd, thanks for joining the show today. Boy, it feels like it's been 1 month so far, but it feels like it's been a year so far. Now, Todd's coming to us from Chicago. Todd, what do you think? I mean, lots to talk about here.
Should we call Frank Sinatra and fly me to the moon?
Yeah,
I mean,
right,
they look great, as you and I have talked about for the last, I don't know, a couple of months, that grains looked really good. And there's still a lot of the same worries and factors that are out there, but the key that we always have to remember is price drives markets, and you can't look at them tick to tick. You have to understand the longer term pattern and what they look like, and they look really solid and look like there's still room to go on the upside. I mean, you and I were talking about a 13, 14 handle on beans, and now we'll be talking about a 15 handle pretty soon. And cotton, just to go off topic for a minute, cotton has made some dramatic move today from lower to much higher, which is really pretty fantastic as well.
Do you think any of this is the inflation trade? I mean, or I mean, obviously there's the money supplies out there too, but I mean, take away weather, take away everything else. I mean, could it just be that there's so much money out there that's looking for a home?
Well, I think so, and I think a lot of money, even though equities are higher, has come out of the equities this week. I think there's a heck of a lot of fear out there, and I think that they're going to start looking for these other alternatives, and then you do have the inflation trade. Listen, you have to ask yourself, for example, it's the stock market. Is it higher because they're fundamentally higher? Is it higher because the money supply has been, reduced so far? I mean, and I think it's probably a combination of both. And I don't think that the fundamentals are all that good for equities, but again, in the grain markets, they look solid as can be, and we got to eat no matter what goes on. We got to eat.
And things are tight. All right, that's a good one to end on. We're going to go away. Stay right there, Todd. Todd Horowitz, Bubba Trading. We're going to pay some bills and come right back and talk livestock after this. All right, here we go. Welcome back to Market Day Report. These markets have been pretty crazy since the beginning of the year. I mean, if you go back and think about it, we've moved around a ton here. And like I said to the guest analyst, the last section, it's only been a month, but it feels like it's been a year already. But that's okay, because it's been generally in the right direction, right? So we'll take it. Let's take a look at what these livestock prices are doing today. Let's look at live cattle in Chicago. Look at this. All right, here we go again. February up $1.12, 138.95. April's up $1.55 on 143.17. So pretty good going there. Feeder cattle. Now we have a strong corn board. That could mean feeders have got a little bit of a cap on them, but they're still eking out a gain. So this is extra strong, I would say, right? March up 62 cents to 160.12. We've got April up 60 cents, 52 cents now, just dropped. 165.62 last in that April contract. But both of those cattle markets are better today, and that's good to see. Now, lean hogs might be a little bit of a different story here. It's mixed, actually. Feb's up 52 cents at 87.55, but we do have April off just a tick, 2 cents at 94.65. But all in all, not too bad. Let's bring in our guest analyst. Thanks for sticking around. Todd Horowitz from Bubba Trading. He's in Chicago. All right, Todd, what does livestock say to you?
Well, look, we've been very bullish livestock with the one exception, which still stands. If inflation continues to get too far out of control, I think that will cause the problem. If we stay or can start to get it under somewhat control, and certainly the Fed did not do what they should have done the other day. So if we stay, somewhere around here and don't see, crude oil spiking over $4 and $5 a gallon and other things happening, I think prices will continue to rise or at least stay steady. However, we do have that inflation worry, and we have the worry of, interest rates and everything else that's going on when, we've got oil up today, or it was up at least at one point almost $2. It's only up a little bit now, but it was up almost over $2, and that's not a good thing for anything.
Right. So you just said the Fed didn't do what you thought they should do. What did you think the Fed should have done this week?
Well, I think they had to raise rates here, Scott. I mean, not that I want to see higher rates, but I think they have to really start to stamp on it because, as we all know, when they finally decide to act, it's going to be way too late. They're already 5 or 6 years late on getting this done. And, if they're not going to reopen the wells for fracking and shale producing and lower these oil prices, inflation is going to continue to get out of control, because I could see crude oil going over 100, and I could see it going back to the all-time highs as well.
You're preaching to the choir, because I've been telling everybody on this show that if you see crude oil continue to tick higher, it's such a large part of that inflation thing, it's going to cancel out these rate hikes, really. I mean, or at least a large percentage of them. So let's keep an eye on that one. We'll both do it for them. Thank you very much for being on the show today. That's Todd Bubba Horowitz in Chicago. Thanks for being on. And we're going to bring this one back to Nashville. So we're going to throw this over to Suzanne this time, rightfully.